we are doing May-June 2015, paper 41. We have to prepare a property, plant and equipment schedule. Now you should be very careful. The property, plant and equipment schedule follows a fixed format. The fixed format is that you will give the cost on the first date, any additions will be added, any disposals will be subtracted, and you will get the cost on the last day. So the first thing is related to cost. Okay. So cost on day one, add purchases, at cost, minus disposal at cost. You will get the cost on the last date. The second part in the property, plant and equipment schedule would belong to the depreciation. Second part in the property, plant and equipment schedule would belong to depreciation. So you will have the accumulated depreciation at the start. You will have accumulated depreciation at start. The current year charge you will add. You will minus the depreciation on disposals. So you will get the accumulated depreciation at the end. Net book value at the start would be cost at the start minus accumulated depreciation at the start. You will get the net book value at the start. Net book value at the end would be cost at the end minus accumulated depreciation at the end. So this is how you get the net book value. So your property, plant and equipment would have three parts. The first part would be related to cost. The second part would be related to accumulated depreciation. And your third part would be related to your net book value. It will be cost at the start plus purchase minus disposal. You will get the cost at the end. For accumulated depreciation, you will do accumulated depreciation at the start plus the current year depreciation minus the accumulated depreciation of the asset disposed. You will get accumulated depreciation at the end. Cost at the start minus accumulated depreciation at the start will give you net book value at the start. Cost at the end minus accumulated depreciation at the end will give you your net book value at the end. This is the format of your property, plant and equipment schedule. And here, what they have asked you, they have asked you to prepare your property, plant and equipment schedule for 2014 paper. So let's see how to prepare the property, plant and equipment schedule. Okay. We will read our statement. We have our income statement. We have our statement of changes in equity. In this statement of changes in equity, this dividend paid, you should keep into mind. You have your statement of financial position. Now, when I'm seeing my statement of financial position, I see I have three assets, or I see I have two assets. First is property, plant and equipment. Second is my investments. Okay. Third is my goodwill, that is intangible assets. Then I will go ahead. I will give the adjustments. What is there in the adjustments? So they have made our work easier. They have given me extract from the notes to financial statements, where they have given me building, plant and equipment, motor vehicles, and this total is 514,000. So this total is 514,000 for my property, plant and equipment. So this is for which year? This is my 2014 property, plant and equipment, where they have given me costs minus accumulated depreciation. The first part is of cost, second part is of accumulated depreciation, third part is of net book value. First part costs, second accumulated depreciation, third part net book value. That means you already have your first parts. Now let's go ahead. This I already have. Now I will go ahead and see what information they have given to me. Capital expenditure for the year. You have purchased building, you have purchased plant and equipment, you have purchased motor vehicle, and no disposals are expected. So you will take your property, plant and equipment schedule. The very first thing that you will have, okay, let's do it together. The very first thing that you would have is you will copy the schedule that is given to you. So if I am copying the schedule that is given to me, it will be building, plant and equipment. Please do it along. Motor vehicles and total. I will do everything, and this is the property, plant and equipment schedule. Property, plant and equipment schedule. Everything would be in dollar triple zeros. First section would always be for the cost that you have. First section would always be for the cost that we have. So we have the costs. That means this is our balance on 1st October 2014. How do I know this is the balance of 1st October 2014? It is given in the question. So this is the financial position on 30th September 2014. So when I start my new year, it will be 1st October 2015 and my year will end on 30th of September 2015. So I am making my statement of financial position. I have balance on 1st October 2014 as 320, 158, 36, and the total is coming up to 514. You will add addition minus the disposal. But the question is telling there is no disposals are expected, and this is the capital expenditure for the year. So this is the capital expenditure for the year. The capital expenditure for the year is 40, 18 for plant and machinery, 9 for motor vehicle. So the total is coming up to 67. Do the total. This will be 360, 176, 45, and 581. My first section is over. This is my balance at 30th of September 2015. What will be my second section of? My second section in the property, plant and equipment schedule will be of the depreciation. The same thing I will write for depreciation. First would be the balance on the 1st of October. The balance on 1st in October would be the one that is given in my property, plant and equipment schedule. So it will be 112 for building, 78 for the plant and equipment, 20 for the motor vehicle, and the total is coming up to 210. Then I will put my charge for the year. Charge for the year, they have given it to me in my additional information. I'm just copying it and bringing it down. So it is 18,000 on buildings, 44,000 on plant and equipment, 12,000 on motor vehicles. So the total charge for the year is 74. There was no disposals over here, so no depreciation is to be subtracted. So my total is coming up to 130, 122, 32, and 284. So this would be my balance on the last date. Now the third thing that I will take is the net book value. So the net book value would be balance, my current balance. That means the balance on 30th September 2015. 360 minus 130. So this will be the closing net book value, that is 230. Closing net book value, this column minus this column. So 176 minus 122, it will make it 54. 45 minus 32, this will make it 13. 581 minus 284, this is going to make it 297. So this is balance on 30th of September 2015. What was the opening balance? Balance at 30th of September 2014 would be the opening values. Opening cost minus opening depreciation. So it would be 320 minus 112. That would make it 208. 158 minus 78. That will make it 80. 36 minus 20. That's going to make it 16. 514 minus 210. So it is going to make it 304. So your property, plant and equipment schedule basically has three parts. What are the three parts? You have the cost, you have the depreciation to date, and you have the net book value. So this is basically May-June 2015, paper 41. After this, we have done the A part, budgeted income statement and budgeted statement of changes in equity in the part 1 of the video. We have prepared the property, plant and equipment in this current video, which is part 2. I wanted to go to the next part of the video and see how do I prepare the budgeted statement of financial position. So budgeted statement of financial position. That means we have to take this format. Which format? Our format which is already there for property, plant and equipment. And in property, plant and equipment, you are going to put the net book value of the assets. What is the net book value of the assets? Actually, I'm continuing over here only. The net book value of the asset for property, plant and equipment is 297. This will come in your statement of financial position. So let's prepare the statement of financial position. We will put the old statement of financial position and try to prepare the new statement of financial position. We will use the format because it's already given to us. So we have to prepare statement of financial position for 30th of September 2015. We will write non-current assets. We will write tangible. For writing this tangible, you're going to get 1 mark. What are your tangible non-current assets? Property, plant and equipment. And for this property, plant and equipment, you have made a schedule. So you will not write this. Instead of that, the balance that we found out on 30th September 2015, that is 297, we will write 297. For investments, it will be 25 and the total is coming to 379. No, the total will change. 297 plus 75. The total is coming to 372. Now, intangible assets. Before going ahead, I want you to read the question. What are the things that we have avoided in the question? We have completed this part. We have completed revenue, percentage, distribution cost, income from investment, finance cost, tax rates. No dividend to be paid. All this is completed. This has been incorporated in the property, plant and equipment schedule. Now this part is there, which will come in your statement of financial position. So it has trade receivables, closing inventory, trade payables, and proposed dividend, nothing else. So I will put this part over here because I need to still adjust this. Goodwill would remain the same. It will remain 60,000. So my total would now become 432. Then I will write my current assets. There are changes in current assets. Trade receivable collection period is expected to be 45 days and all sales will be on credit. So what are my new sales? What is my new sale? Check, I have already made the income statement. So in my income statement, my new sales was 786,000. 786,000 is my new credit sale. And they are saying that the trade receivable collection period is expected to be 45 days. So what will be my trade receivables? My new trade receivables will be how much? Think. So I will calculate my new trade receivables. They said my trade receivable collection period is equal to how many days? 45 days and all sales are on credit. What is the formula for trade receivable collection period? Trade receivables over credit sales equal to 45. What is my credit sales? My credit sales is 786. So my trade receivables would be 786 multiplied by 45. Multiplied by 45. So my trade receivables would be 35,370. They said that the closing inventory is expected to be valued at 17. So your closing inventory will be 17. Now you go to your equity and liabilities section. Go to your equity. Is there any change in your ordinary share capital? So there was no change in the ordinary share capital. We have read the question properly. So the ordinary share capital would remain the same. The non-redeemable preference shares would remain the same. Share premium would remain the same. And this retained earnings would change. We have calculated the new retained earnings. The new retained earnings was how much? Our new retained earnings was 58. So the retained earnings will become 58. So my total of the equity and liability section will become 368. That is 180 plus 100 plus 30 plus 58. It will become 368. My non-current liabilities, there was no change in it. It will remain the same, 150. Now, my taxation would be the taxation that I had found out before, my new taxation in my new income statement. So taxation for the year would be 8. So taxation will become 8. My trade and other payables and my trade receivables. Calculating the trade and other receivables and the trade and other payables is the hard part in preparing the statement of financial position. So this has to be worked on, which we will discuss. Taxation will be 8. And as far as your cash and cash equivalent, this will become your balancing figure because you have no information regarding your cash and cash equivalent. Now your total assets must always be equal to your total liabilities. So in our next video, we are going to try and find out the trade and other receivables, trade and other payables, and our cash and cash equivalent. Thank you.